Love is love.
Love is love. Happy Monday. How y'all feeling?
Yeah. Happy Monday. Ian Dunlap, the master investor himself, is in the building.
Y'all know what I came to do today. Tell your mama, tell your cousins.
You know why he's here.
You know why I'm here today.
I'm a
bad cop.
I'm called ISO. My people, what's going on? Happy Monday. It is the 20th of April. It still feels like it is February here in New York. I don't know what's going on. Last week it was 90 degrees. We are in about 30 degrees currently, or going there tonight. Tonight we're going to 30. Tonight we're going to 30.
Rashad, what's the temperature? Weather report. Jim,
it was like 50.
Today it was 50. But we dropping. But we blessed to be here, man. I would never complain because we are blessed to be here. How you feeling, Ian?
Honored to be here. Happy to be here. Blessed, highly favored, all the things. Red Panda, love y'all. Earners, love y'all. Tim Cook, love you as well. Technology, brother. There's a lot to talk about tonight. So.
Somebody say you forecasted that. Shotty, how you feeling?
Feel good, man. Back at it. We got Blackout on Wednesday. We got a lot to talk about on Blackout. Tune in, Blackout, 9 o'clock Eastern Standard Time on Wednesday. We got NVIDIA coming up on Wednesday also, so that's going to be dope. And then Thursday, Earn Your Leisure episode. First and foremost, thank you to everybody that checked out the Julian Brown episode. Almost
classic.
1,000 views.
Appreciate that, bro.
I'm going to cut you off. Classic, though.
Appreciate it.
Don't get the patent.
Protect them at all costs.
Millions of social media impressions. That episode is just going crazy. So we got one of our favorite people on Thursday. We went to Atlanta and shot a bunch of content. Jada Sheaves. We got her on Thursday at 12 o'clock.
Icon.
Oh man, millennial that's really, got the young world in the palm of her hand, especially when it comes to women. Mm-hmm. And somebody that's really intelligent. A lot of people might not really know. They might just see her on social media or whatever, but this is like the third time that we really got a chance to really, really chop it up with her. We had on our show X Over Liability like 4 years ago. And then she came to InvestFest VIP night. But to see her growth from the last 4 years, as far as her brand is killing, her use of AI, navigating parenthood, buying real estate, she's doing a thing. She's doing a thing. Definitely. So, that's the one thing about Earn Your Leisure. We highlight all levels of entrepreneurship and all levels of success. So,
different CPMs too. I've been
yeah. I think
consolidation of audience.
I mean, you got to skew younger, right? The idea that we've been doing this show long enough that it's been 4 years since we last sat with her, to see her develop, like Shadi was saying, from as a woman, number one, in business and motherhood, making mistakes, learning from those mistakes, being vulnerable and honest and transparent about those mistakes so others can learn. I think she's a dope one and somebody you definitely, if you haven't paid attention to what she's doing on the business side, get your notepads ready. She's going to drop some stuff.
And for you naysayers, don't say, well, it's because of her baby father. Some of y'all have rich baby daddies and fumbled them. Keeping them in the family and keeping the family together so you can't elevate like she did is a core lesson.
Yeah.
Brought to you by Ian Dunlap, the master investor. Put it in chat. Quit fumbling the rich baby daddies.
What's interesting? In 2 interviews that we've done, we never really even brought that up. It's really been focused on her business, and she's very astute about it. And so, like the early stages was who she was in the first interview to see where she's at now. Yeah, I mean, we're always pleasantly surprised, but to see her actually coming out with product partnerships, she says she's still turned and lit, but she's a businesswoman at the same time, which is dope.
And it's a great lesson too. Even if this isn't, let's say she's in your target market, the best advice you can always get, word of the week, chimera, to be a hybrid of many things, to learn what she did in her industry and be able to apply it to yours. There's this true thing such as like marketing incest, right? Well, like everybody in the category will do the same thing. The best ideas come from looking at other people who don't do that thing, apply it to your industry and get a multiple on it. Back to you, Tron Rashad.
Wait, you gotta give them the word of the week again so they can go write it down, look it up.
Yes, chimera. It was actually the first name for Red Panda. CHIMERA. Chimera. I'm on the board today.
Get your ticket to InvestFest, man. We got a lot brewing. We got the Black Tie VIP night. We got we got the pitch competition, which ends on the 20th. Is it tomorrow? Today. Ends at midnight. Get your applications in. Pitch competition ends at midnight. We got the singles room with Kendra G. And we got a bunch of other things that we cannot announce yet. We got a bunch of other people that we cannot announce yet. But just know you see us doing a lot of these interviews. Just know Just know.
We're traveling all over the world.
I see. Got to get the job done.
That's a fact. Any announcements?
I will see you guys in Atlanta Saturday and Pullman Yards for Black Effect Podcast Festival. Kudos to Dali. Kudos to Charlamagne. Love you both dearly. Stock Club call Sunday at 9 p.m. Central. If I made you money, please put yes in chat. Presentation will be back in rare form. I got some surprises. It's going to be a good 2-hour conversation about the state of the market. Tim Cook's departure as CEO, what I think of the new CEO, and the aggregation plan for the next 4 or 5 years for Apple. So the link is in Telegram, link is in Kajabi. Register, get there early. It's going to be a good one.
Yeah, and shout out to everybody that pulled up to the class on Thursday. Greatly appreciated. We was in there for about an hour and a half. Spit some real stuff. Had an outlook on the market. So shout out to everybody that pulled up. Shout out to EYLU. We got a few birthdays. Shout out to Austin. I know he just had a birthday, part of our investing club. I know Ashanti's birthday. And shout out to Pierre, man. He had his birthday last week.
Shout out to Pierre. Well.
Yeah. And our brother Terrence J, man. Happy birthday, my brother.
Happy birthday.
That's a fact.
Let's talk about the trading tip of the week.
Let's do it.
It's a continuation of last week. All gaps fill with the direction of the market. Did any of you take advantage this past Sunday? So the interesting part, sometimes when you get information, and I learned this from like watching y'all run around and go to Africa, then come back to New York, then go to LA, then you go back to Africa, right? Sometimes when you get the information, you have to execute it right away. This past Sunday, the S&P future fell again. So if you get another, I think we'll have one more of these where we gap down. Now this one gapped down because of futures expiration. Put in chat, futures expiration is when all the contracts have to be liquidated. So if you're in a position for 20 days, you then have to clear. Sunday, we fell down to 7,085. We're currently at 7,155. So some of the moves, like I've been talking about on Sunday, are there, but the gaps fill with the predominant direction. Take advantage of each one, because I think probably by July or August, we won't have any more for the year. So take advantage of the move while it's there.
I think that's amazing. I'll add to it. And I told everybody to circle the date of March 19th, right? That would be 30 days from when the S&P had lost its 200-day. My tip would be, when an equity or an index reclaims its 200-day, allow it to hold before you start making moves. What does that mean, right? It might touch the 200-day and fall back under. It might touch the 200-day, go up, and then fall back. Let it reclaim. And reclaim is the important word here. Reclaim, meaning that it is gone above the 200-day and it has stayed there. How do you know that it's going to move in the momentum upwards? This is where volume comes into play, right? So you want to see how much volume is in that move, right? And you usually see by candles, right? They will indicate strong green candles that will be going up. Let it reclaim, let it hold, and let's check the volume before we start making moves. We saw the S&P go under its 200. We watched it reclaim it within those 30 days. We told you what that meant. Usually, right? This is 100% of the time. I shouldn't say usually. 100% of the time that it's done that within the first 30 days of losing it, the S&P is going positive for the year. It's a home run. So that indicates that we're going to have some upward momentum. Doesn't mean that we won't have a pullback every now and then throughout the course of the rest of the year, but it shows the signs that the S&P is going to end in a positive for the year. So that would be my tip. Let it reclaim, let it hold.
Yep. And for anyone who's asking, what should your target be on the gap fill? So for example, towards the end of the day, that low was 71.50. Then Sunday it dropped. Whatever the previous candle is, the bottom of that candle, that's where you want to start to look to take your profit. And if you see right at 8 o'clock, it went to 71.59.96, even though it won't fill there, and it immediately went down. So take the previous candle from where it gapped, draw a line at the bottom of the candle, not the top, and then that should be your exit price when we go back to the upside. But this is a classic strategy, but you have to get the direction right. Like if a stock or a future is in the wrong direction, you're going to have a lot of trouble. Always go with the predominant trend that is there in the market.
That line you're drawing, that's the new support? That's what you're saying?
Yep.
Okay. Perfect.
Yeah.
Let's talk about the investing fact of the week.
Rashad, did you know if you invested $10,000 when Cook took over Apple, you're sitting well over $150,000 today, and if you'd invested $100,000 into the stock, you would be up $150,000. Apple stock performance.
100,000, you'd be up $1 million.
1.5, excuse me. Yeah. Excuse me. Correctly. And Apple stock performance since August 24, 2011 is up 1,932%. Job well done. It shows the power of a long-term hold when you have one of the greatest operators in history at the helm after a time when the stock was incredibly volatile. The lesson here is to hold for a 10-year period for the biggest tech companies on earth. For those you are saying, what's the next Apple? There's no new Apple, but I am looking to Anthropic's IPO. You can look forward to Databricks, SpaceX, Starlink, OpenAI. Those are the 4 of the future that you can look forward to. Have long-term holds in those.
Yeah, I got my fact. Here it is. I'm going to say it. We can say this as many ways as possible. I wrote it down. Wealth isn't built by avoiding bad days. It's built by surviving them long enough to catch the great ones. I'm going to say it again. Wealth isn't built by avoiding bad days. It's built by surviving them long enough to catch the great ones. So everybody's trying to time the market. They're trying to figure out, you have to be in the game, right? You're not, yes, nobody wants to lose money. Nobody wants to see their account go red for the day. But are you in the position in a strong company long enough to say, okay, I've done it. I'm here. This is part of it. Here comes the upside. We've seen that happen with, I don't know how many companies over the past 4 weeks. This is a small microcosm of what the market can do. And so when we see pullbacks, we're not running away from them, right? We understand that these days happen. This is where repositioning happens. This is why having your resistance levels and having your support levels are important. But are you in these long enough, some of these positions long enough to actually see the outcome? We've seen it now happen with Microsoft, some of our software companies. I just watched Synopsys and Cadence do the same thing. And now it's, oh my gosh, I can't believe, well, we were in strong companies. Was there a pullback? Yes, but we were in them long enough to see the gains on them. We're going to continue to see gains, in my opinion.
Another one is a substantial amount in an investment can be greater than a minimal amount in a trade.
Listen, oh my God. You and I are thinking the same thing. Go ahead.
It's true.
Go ahead.
It's really true. So it's like, what do I mean by that? It's like, okay, if you have $100,000 in an investment and it gets 10%, you made $10,000. If you have $10,000 in a trade and it gets 100%, you made $10,000. So you should do both. You could do both for sure. But what also could happen is you could lose everything in a trade and that 10,000 goes to zero. So the name of the game when you're playing with larger sums of money, you don't necessarily have to have the most spectacular rates of return. You just got to be consistent. And that's really the game at the highest level possible as far as like, now, obviously you have to have a lump sum of money, but it's a mindset to think about, because if you get good returns on large sums of money, that's actually the same as getting spectacular returns on smaller amounts of money.
Yeah, it's a risk mitigation. Right, it's one of those things. I had this conversation with Mike all the time. He's like, "Look, you did 1,000%. You did 2,000%. Why didn't you put 500,000? Why didn't you put?" I'm like, Mike, it's a risk mitigation, right? Yeah, we can get 1,000%. We're gonna put this amount of money in and watch it grow. Now, we're not just doing that one time. We're gonna do that in a bunch of strong companies and watch it grow. This is how you build a portfolio. But I understand it. It's like you see some of these astronomical gains and like 2 things happen. Oh, I should have invested more. Or damn, why did I invest? Right? Like you can't pay both sides of it. So you have to have risk mitigation, especially when you're trading options and trading futures and you can see some of these astronomical gains. It looks great until it doesn't go in the direction you want. And then you're like, why did I do that?
In addition to, your bet sizes need to be the same, because the trade-off is like you got to have conviction in the trades and investments you're making. One of the worst feelings is to put $100 on something that goes 2,200%. Like you're one way to stop from having FOMO on either way is trade in the futures market the same amount of contracts, or dollar-wise put the same amount in every single trade. That's an easy way to prevent you from blowing up your account. But when you have conviction, you got to put some size on. But the same bet every single time, it takes away a lot of that stress and fear. For real.
Yeah, you spot on. I'm gonna keep it real. I did this with Apple maybe a year ago, 2 years ago. It was like $4,000 that was just in the account. I was like, I'm putting in an Apple call. That 4,000, I think it gained like 900%. And I'm thinking to myself, oh my gosh.
Wow, yeah, what did I do? Yep.
But you know, you live and you learn.
You live and you learn. And the great part is like from these mistakes, this is where you get all of your lessons. A lot of times people ask me like, how did you get this insight? I'm like, it's from being active and writing down the mistakes. Like once you have a system in place, the system really comes from the F-ups you had early on and wish you could redo them over. Write down every mistake that you make. You'll have your own blueprint, your own playbook for how to navigate this market.
And it's objective. In the back of my mind, I'm like, you can't lose by making a profit, but you know that there was something greater there.
Yeah, on the table.
Yeah.
Okay. I want to talk about relationships too, just to kind of detour, because we definitely got to give a congratulations to Nas for opening the new restaurant. And
facts.
At some point in time, we probably will be actually fully explaining our whole, because there is a strategy to relationship building. It's not random. And if you do it consistently enough, it's like anything. You can get lucky once or twice, but you can't get lucky for 7 years straight. So there is a very specific set strategy.
What's the strategy, Rashad? Audience, I got you. What's the strategy for it?
Funny you should ask.
I wish I had more time, but one day we're going to tell his story in full detail. But I will say this, man. One thing that I will say about Nas is that we met a lot of great people. Like, as far as we haven't really met anybody that was like an asshole that was like, famous or somebody that we looked up to growing up. For the most part, everybody's been cool. But I think he has the lightest heart.
You can see that.
It's hard to explain, but he's a very lighthearted person. Like, every time you see him, he just laughing. It's just like he's like a teenager. Like, he's a very like lighthearted, like telling stories, like joking. Like, he's in a very good space in his life. And that's important, because the energy that you project is the energy that you get back.
Absolutely.
So it's not a coincidence that he's getting involved in all these deals, the casino, the restaurant, venture capital. Like, I think that within itself is a very valuable lesson. He's projecting a very warm, lighthearted energy, and he's being rewarded for it. And congratulations to him. But that's a key component to building relationships. I'll say that's one part of building a relationship, is actually just projecting energy that would be welcoming to other people, as opposed to, a very aggressive. Yeah.
And you can see it in the partners that he's selecting, right? We have an opportunity to meet some of the partners in Coke Dot, which is his restaurants, which are going to do incredible, by the way. There's one in Vegas and the one just opened in New York. But seeing him navigate the relationships that he has, and then having his like day one people still with him, is dope. Because that's something very common and very familiar with our story, right? Like, we still are the same guys. We're around a lot of the same guys that we grew up with. We're fostering relationships. People are seeing that happen in real time. And then when we see him, it's just like, damn, this is really a blueprint. This is really a blueprint. Even the rooms that he's cultivating, it's phenomenal. And he fits in every setting, which is kudos to him. So
it's good to see, because a lot of times, especially shout out to Dame, that's the brother. Dame, that's the brother. But
always,
that's the other side of it, as far as like a very aggressive CEO type person. A lot of times people think that that's how you have to be successful. It's like very aggressive, very, loud, very, and that does work for some people, but it's good to see when the other side wins too. Somebody that's very humble, very, mild-mannered, very warm-hearted.
Kind.
There's people like that win a lot in business. And the people that's loud, they get highlighted a lot. But most of the really, really successful people, there's more people like that than like the Donald Trump and like the loud, obnoxious. There are people that's like that are successful, but when you're chasing your dreams, don't try to be somebody that you're not. It's okay to be a good human being.
It's better to be that way.
Shout out to Nas.
Yeah, let's go. Troy, right. Rashad gave one tip. What's the second tip you would give to building relationships worth more than money? Back to you.
I think treating everybody with the same amount of respect as the leader of the company or the leader of the business. We're just as cool with Jeff and Peter and the entire team as we are with Nas. Now, obviously, we looked up to Nas our entire lives. On record, I said this is the first guy I wanted to be like in my entire life. But it's important to show the other people around him how much you care about them, how much you value them, because they're in contact with that person more than you are. And we learned that. Fat Joe said the same thing. Shout out to Rich. He was like, look, anybody that treats Rich any differently than they treat me, I can't keep them around, because they're only doing that to be around me. And so you learn that very early. You respect and give value and show, commonality in those people. And then they'll say, look, those are guys, those genuine guys. I love being around these guys. And everybody says the same thing. When we come around, like, I love those guys. We got to protect those guys. It's because we treat everybody with the same amount of respect.
Yeah. I love it.
Yeah.
There you have it, ladies and gentlemen.
Yeah, shout out to him. The casino's opening. February, April 28th. April 28th, I think they open.
Starting around the corner, okay.
Yeah, so like 2 weeks. So shout out to them again.
Yes, sir. Okay. What is the oil surge strategy?
I'm not going to say you should stop trading oil, but I think a lot of people are looking to make an amazing move on, especially in the futures market. And I think even though they keep flip-flopping, I think the world is getting adjusted to Donald Trump's manipulation of the market. So I think we may have another 2 months of this oil trade, but I really want you to focus on the ES, NASDAQ, and Dow. Even though consumer confidence is probably at one of the lowest levels since probably 08, 09, the market has been on a tear. We're hitting all-time highs, and I don't want you, like, I know someone who personally took their money out of the S&P and out of tech and moved it into a crude.
Ooh.
And I'm like, I get the concern. It's like, well, if I can time this right. And I'm like, because of the big short, I think everyone's looking for an amazing short, opposed to realizing you're going to make a lot more money trading, looking for a bull market and being invested long-term as well. So the crude surge strategy is I would not rotate your money out of tech, out of the S&P 500, whether you're trading, whether you're swing trading, you're doing options. Look for the ES long-term. And if you just compare it on volume, even though we've had a considerate incline and talk about the crude market, the volume doesn't match the S&P 500 at all. So stay focused on what's thriving and what's doing well. And this is one thing I love about the futures market. You can trade the same asset over and over again and get the same return out of it. But a lot of people are making a mistake and going so hard into energy at the wrong time. Stay focused on the ES, NASDAQ, Dow for long term, because I think we may only have 2 or 3 more months of this crude trade anyway.
And I'll say this too. Shout out to the brother Buster Rhymes too. That's the bro, and AZ. My contractor, he went like 2 weeks ago when all of this was happening, he was telling me, he was like, sell all your stocks and just buy real estate. He was like, yo, the world is about to crash. Like, this is not going to happen. He's like, real estate is the only thing. It's the only thing that can really tangible. You know, the real estate people, that's the same argument. It's like, it's tangible. If all else fails,
so is the stock market. Not to cut you off, every major company, you can drive past a fucking building and see the shit in there.
Yeah.
Sorry, Rashad. I get tired of that though.
So he was telling me, so then his son, he told his son the same thing. Like, look, take your money out of the stock market, buy real estate. He was heavy. He's like, yo, this is prophecy. Prophecy will be fulfilled. It's kind of hard to time prophecy. That's the only thing about it.
Unless you me, but this market not falling no time soon.
Oh, you got the prophecy timer too?
That's the crystal ball.
Yeah, the prophecy on my first joint, y'all all aimed out.
No, I'm talking about religious prophecy in the world times.
If we're gonna be very honest, the crystal ball is powered by God. That's the part that's not talked about enough.
But do you have the time? Do you have the end of world? Do you have the end of world calculator?
Powered by God.
Polymarket.
Are we talking about our universe or the parallel ones?
Yo, no, this guy's
the multiverse.
The Spider-Verse.
What? So
might tell you a joke, but I never lie to you.
That's a fact. So I'll say that to say, a lot of times, this isn't the first time that somebody has said something like that. Long-term investing, you have to be able to weather the storm, because put it like this, at some point in time, this whole thing is going to fall. Mm-hmm. But if you own real estate, that's not going to help either. If the stock market goes to zero, real estate is going to be screwed anyway.
For sure.
So we all in this boat together. If it burns down, we all getting burnt together. So I don't necessarily think that just jumping ship at every crisis is the best way to go about it.
That was my investing fact, right? Like, stay in the positions long enough so that you can see the great return. That's how wealth is built. So running when you see a downturn is not the solution. In fact, that's the exact opposite of what people with wealth do. When we see a pullback, when the NASDAQ goes down 10%, I'm like, they about to flood. They about to flood. Here comes the volume. And you see, 2 weeks later, here we are. Right. So you gotta have that long-term mindset. I'll tell everybody, put your seatbelts on, right? The market isn't going anywhere. The stock market is going to stay here. It will have its ups. It will have its downs. It will have a pullback. At some point, we will have a correction, a deep correction, right? Not more than 10%. But that's not happening right now. So we got to take advantage of it.
A couple of thoughts, if I may. For the people in class that says that that's an old way of thinking when you had decoupling of asset classes and all the assets in the world were not muddled together. 2, any stock that's publicly traded, you can drive by the offices and then be able to see them. Lastly, because of quantitative easing, which is the lever that rigs the market to stay up, if you look at median home value increases since 2010 versus the returns of the stock market, the returns in the stock market are higher because of how much money they printed, how much tech companies were able to borrow at 0% interest, in some cases negative. And finally, I need you to know, no asset manager or hedge fund divides the asset classes. Please put that in chat. When you guys went to BlackRock, you never heard them say, we're getting rid of commercial real estate, even though it's collapsing, part residential, or equities. You just figure out the correct allocation based on the return. Put it in chat. It's not one or the other. It is both. It's an old mindset that is antiquated when there wasn't as much quantitative easing. And for my real estate investors, I would argue, since you understand comps and comp structure a lot better, you probably will be a better investor in the market because you understand how BlackRock and Vanguard will aggregate and make a fund because you're doing the same thing in a residential neighborhood. But the answer is both, not one or the other.
Please.
Yeah. Okay. Let's talk about the strength of the market. And a few interesting things I saw on Instagram, put in the group chat. So S&P 500 relative to M2 money supply is almost exactly where it was at the .com bubble. And then also the S&P, the .com bubble overall chart laid over the current S&P 500 chart is almost exactly the same. So a lot of people are starting to say this looks a lot like the .com bubble and a market crash is coming.
With all the kindness and love in my heart, from me to you, from Xander to you, if you think a crash is coming this year, you're misinformed. Will it come next year? Yes. The great part about my thesis about people say, why invest in 2 index funds if they hold the same companies? Team, clip this up. I've always said for mitigation of risk. Notice when software stocks were down 20 to 35% to 55%, the S&P was only down 3% and everyone was panicking like it was 1999 or 2001. I will say, despite the difference between 99 and now is that companies, okay, think about it this way. I criticize Apple while being at 4 trillion. In 99, you couldn't put 6 companies together that was half as good as Apple's 5th competitor. The strength of the market is better because the companies are better. Look at Anthropic, and despite all the stuff I've said about Sam Altman, and that's been revealed in the book that's come out and all the investigative journalism, that company's worth $1 trillion. Anthropic's worth $1 trillion. SpaceX worth it pre-IPO.
Maybe 2 trillion.
Arguably, right? So the strength of the companies are better than we've seen. And you can't leave out Google, you can't leave out Lilly, you can't leave out. There's a bunch of companies, if you go down the list of Dow, the S&P, the NASDAQ, that are like some of the highest grade of company that we've ever seen. So the comparison would be false. And wishing for a crash does what for you? It does nothing. Even if let's say we drop 50%, like if I can be very honest tonight, who doesn't give a damn about a crash? The people who've been invested the last 10 years. A 50% drop means shit if you're up 2,500%, 3,000%. Like the people who got an Expedia in 09, 20, they don't care about a drop. That's why length of hold, for you guys, it's already been 7 years? I don't think y'all selling in the next 3. Why? Because you've extrapolated what the IP is going to be worth in 22 years. So I think everyone who wishes for a crash are only the people who've been sitting on the sidelines.
I think I'll say this. I'll say that they do care if there is a crash, from the standpoint of great. Here comes a new entry point for us.
It's a great time to buy. Yeah,
there's going to be another. Yeah, I think the .com era is hugely different, and I think you kind of touched on it. But when you look at the revenue that these companies are bringing in, that changes it. When you're talking about Apple, Nvidia, Broadcom, Amazon, Google, you're talking about Meta, $1 trillion companies.
Micron.
And Micron's not even a $1 trillion company yet, right? But we've been in this company since it was $100 billion. It's probably sitting at about $500 billion now. SanDisk is not even at $200 billion yet. There's so much more growth for these companies. The demand has not changed, and we're still at the start of a revolution. I think that's what makes it very different from the .com bubble. And this, we're going to see every.
That was the start of a revolution too.
True.
The .com.
I was going to say we had to start at this revolution, but the demand is there, and we're starting to see now companies that are about to IPO that are going to have some of the answers of how we now monetize it, right? Like I personally just like Claude.
Same. Hit the upgrade, right?
The run that they've been on, right? Like I started out as a $19 subscriber to Claude Pro. I've recently upgraded to a $200 subscriber to monthly. Why? Because of how I'm using it on a functionality basis. So that starts to tell, like, here's the story of how we can now monetize on some of the AI that we're using. Minstrel is doing it in Europe. There are more stories coming out. We already talked about Manus and what Meta's doing. So the use case is slowly starting to creep into the story. Quarter after quarter, we keep thinking, okay, well, the demand's going to change. The demand's going to change. And every quarter that we've seen, and we're going to see big companies coming up next week. The mega cap companies will be reporting. I know there's some that's going to be reporting this week as well. That hasn't changed, right? We just saw TSM. Demand has actually tripled.
Well, would you say some of the best companies in human history came out of the .com era?
A few.
A lot of them.
A few. I think there's more
Google,
great. Yeah. Well,
Amazon.
Google, Amazon.
Tail end. Amazon for sure.
And part of the .com era.
Yeah, no, I'm just saying Google.
It changed the world. It's comparable. It birthed some of the strongest companies ever. It revolutionized the world. Started a revolution. A lot of the same talking points you could say about .com wasn't like NFTs. Like
no.
There were a lot of companies that bust. The AOL Time Warner merger.
But the key is, why did they bust? Why? Pause. Because of the revenue, right? Like, were they bringing in revenue quarter to quarter to quarter to quarter? Was there a demand for their services? There might have been a demand, and there might have been an influx of companies in the .com.
They were trying to create the demand.
Yeah. Exactly. And that's the difference, right? So when we're looking at demand, we can clearly see it. How do we see it? Because we're watching it being spent with a lot of these AI companies. There's a reason why Broadcom is now almost a $2 trillion company. There's a reason why TSM is having this triple increase in demand. Where it's the reason why ASML is shipping out machines to a point where they can't even meet demand at this point. And that's just from the AI infrastructure. If we start talking about energy, if we start looking at the GE Vernovas, I know we're going to talk about a few other energy companies. There's demand there. There's demand for infrastructure. There's a huge revolutionary demand that's happening that makes it a little bit different because of the revenue that's being brought into these companies.
The question is, why did they bust though?
Hey, yo.
Pause.
You ready?
But Rashad, to your point though, I would argue even in
excitement.
This AI...
American Pie.
Yo, I love the show.
Yo, powered by
Mado, we need you. One episode. But in this AI era, there's a few companies I think that will suffer the same fate as some of the ones in the .com era. If you look, WorldCom was a part of that. Excite, Webvan, eToys, Pets.com, GeoCities, Netscape, who was acquired by AOL. The prominent players that came out of it was Amazon, Google, Nvidia, Intel, Dell, Compaq went under. So you're going to have attrition. Like the premise of
that's a lot. Yeah, but look what you just said. You said Nvidia, Amazon, Google.
Put an asterisk.
There was more death in that .com era and a bunch of money wasted though. There's going to
be a lot of death in this era. The strong companies, the cream always going to rise to the top. There was a lot of great rappers of New York in the 90s, but there was 10,000 rappers in New York that never made. That was a bust.
Are you putting Nvidia because it IPO'd during that era? Because
Nvidia was not a darling in the 2000s.
Right. It's not.
But it came out of that era.
It came out of that. And you can argue there were probably 4 to 5 great companies versus, my math maybe, I think it was 122 companies.
What's the years? What are we saying the years are for the dot-com era? 99, well, 96
let's go 96 to 2000, well, pre-World Trade Center, so 2001.
Yeah, so then Google doesn't IPO to 2006. Right? So we don't, Meta's 2012.
Yeah,
right?
We didn't say Meta. Meta's a social
No, I'm
media.
saying, but
Meta's a social media company. Google is a .com company.
But Google's 2006, so it'd be
yeah, because the .com era technically is 95 to 2000. Yeah. It was like when we were in high school.
2001 is like
Intel, right, Intel,
we're out of here.
Microsoft benefited, but Microsoft IPO'd.
And here's the other argument too. This revolution has helped those .coms. So a company like Dell,
the ones that were left,
Dell has completely